Hello and welcome to the Lima Market Report. Here's a walkthrough of last week's market action and what to watch as we move into October. Last week, equity markets cooled after a powerful September rally. The S&P 500 declined about 0.3% on the week. The Nasdaq saw a deeper dip, down about 0.65%. Bond markets also modestly retreated. The U.S. aggregate bond index fell about 0.28%, while treasuries dropped about 0.22%. So what drove the moves? A few key themes here to talk about. After consecutive all-time highs in September, market looked for a breather. Valuations were getting extended, especially in tech. Investor attention turned to a looming U.S. government shutdown, which threatened to delay key data releases and heighten uncertainty. In the background, markets continue to price possible Federal Reserve rate hikes, especially if softening data emerges. So the bond sell-off was modest as well, but consistent with modest risk repricing and rising yields as safe haven demands came down a little bit. Geopolitically, markets remained watchful of global tensions like what's happening in Europe and Asia through no single shock that dominated those events. As we enter the week of October 6, here are the opportunities and the risks to watch. Opportunities. With markets at a little rested, renewed momentum could emerge if economic data surprises to the upside. Fed Chair Powell's speeches and the upcoming Fed minutes could offer clarity on a path of monetary policy. If the government shutdown is resolved swiftly, that could ease one of the big overhangs and restore confidence. Sectors that underperformed, like materials and communication last week, may see a catch-up bounce if sentiment improves. Concerns. What are they? Delays or surprises in labor or inflation data could push the Fed to stay more hawkish than markets expected. Also, a prolonged government shutdown could sap consumer or businesses' confidence and restrict fiscal stimulus. If external shocks arise, like the geopolitical escalation in Europe and Asia, risk assets could also suffer. Bond yields could resume their upward trend if inflation prints stubbornly high, pressuring valuations. So while markets absorbed some pressure last week, the stage is set for a potentially eventful October 6 week with major data releases, Fed commentaries, and political developments all in play. That's all for this week. Visit MRAadvisory.com for additional info and updates, and have a great week. Thank you.